Good morning. Welcome to Friday's edition of Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima, and with me is Vivek, and it's a tough. Okay, there you have Tuhin Kanta Pandey, the new SEBI chief. He's taken over for a period of 3 years as Madhvi Puri Butch, the outgoing SEBI chief's term, comes to an end. So we've got the mic thrust at him, and we're awaiting the first sound bites coming in from the new SEBI chief. He's currently holding the position. I mean, he's been holding the position
yesterday,
of
and the government has given the responsibility. I'll go there and join. I'll just make out, when I will go. Thank you.
So when is the last day then? Do you have any clarity over here?
No, not yet. I think yesterday got the order. Thank you.
So what would be challenging
Priority areas, what will be priority areas?
No, as I said that I'm yet to join, so let me take over and will let
But
you
you
know.
have been speaking about the growth of the market even during the budget
Yes, and the
conversation,
stability,
sir.
something.
But what in that context, sir, what do you think? Where is the market standing, and how does the regulatory body play a role right now?
Well, I think I will not speak at this moment. Let me take over. Yeah. Thank you.
Thank you, sir.
Very tight-lipped right now, Mr. Tuhin Kanta Pandey. He will officially take charge on the 2nd of March, and Madhvi Puri Butch was SEBI's first woman chairperson. Tenure ends on 1st of March. Right now, at least, not divulging too much, but he's a person who's held many positions in the finance ministry. He was the DPAM secretary and now the finance secretary as well. So he has been instrumental in shaping the policies so far. But back to the markets, the only good thing perhaps is that after the sell-off in the first 1 hour of trade, with open gap down 200 points down to 20 points lower, the sell-off further intensified. The Nifty cracked close to about 300 points. But since then, in the last 45 minutes or so, it's not that the sell-off is further intensified. The Nifty is still at 22,250, a cut of about 300 points. Sensex down nearly about 300 points. IT is selling off rapidly and sharp. There's a big fall of more than 4% on the Nifty IT index, but auto is weak in trade. The Nifty auto index is 3%, and the broader markets are collapsing. The mid-cap index is down close to about 2.5%, and look at the advanced decline ratio. No respite over there, 1:9 in terms of advanced decline.
Good morning, Rima. You're absolutely right. Absolutely no respite as far as the broader end of the markets are concerned. The March series and the new SEBI chief, both of them have been welcomed with the shade of red as far as the screens are concerned. Well, Rima, we just had a look at the markets as far as how they've done in the year 2025. And it doesn't make for a pretty reading at all. Have a look at the Nifty. The Nifty is down over 1,350 points, so almost 1,400 points lower as far as 2025 is concerned. Almost a 6% fall in just the first 2 months. Remember, this will be the end of the second month, at the end of today's trading session. The Nifty Bank is down and over 5%. The NSE 500 index, the very good barometer as far as the broader end of the market is concerned, down over 10%. The mid-cap index down 16%, and the small-cap index has borne the majority of the brunt of the selling pressure. Call it what you maybe, earnings slowdown, valuation, but this particular index is down 20%. So, that is just what's happened the last 2 months or just the first 2 months of 2025.
Indeed, an individual, sector. So, for instance, the defense sector is down 20% this year itself, and from its 52-week high, it's a 28% fall. Railways have come under pressure. So, these are some of the sectors where you've seen a further underperformance. But Hormus is now joining in to fill us in with details of the key changes that Jeffrey has made in their portfolio.
Chris Wood, in his latest Greed and Fear note, has made some very interesting observations with regard to the correction in the Indian markets. But before that, the changes that he has made to his India portfolio, the big one being the fact that he's going to be introducing an investment in Interglobe Aviation or Indigo with a 4% weightage in the India portfolio, and that will be financed by removing the investment in Coal India, which is incidentally one of the few gainers on the Nifty today, and trimming the investments by 1 percentage point in Thermax. So that is how the Interglobe Aviation investment will be financed. The global portfolio also will see a change where the weightage in Alibaba will be increased by 1 percentage point, and that will be financed by reducing the weightage on ICICI Bank by a similar quantum. Now, with regards to the correction, he's mentioned that the sell-off that we are seeing right now is purely technical in nature. It's a compression of valuation multiples and not because of any adverse macro scenarios that the country is facing. What he also says is that the sell-offs in the mid-cap and the small-cap space is higher because, of course, the valuation multiples there were on the higher side, and the majority reason for the sell-off in that space is because of the aggressive selling from the FIIs. What he also alluded to his own greed and fear portfolio in India, which is heavily concentrated towards real estate, infrastructure, and industrials, and these are the ones that have seen the biggest correction this year so far. And he also compared that until 17th of December last year, the greed and fear portfolio was up almost 18% in dollar terms in comparison to the Nifty, but since then the portfolio has underperformed the index by 12%. So technical factors behind the sell-off in India, no major macro headwind that the country is facing, and an investment in Interglobe Aviation is the key takeaway from the latest greed and fear note.
Thank you so much, Hormas, for joining us and giving us a sense of what exactly Chris Wood has to say as far as the recent fall is concerned. Well, some recovery seen, especially as far as the Nifty Bank is concerned. Names like ICICI Bank, Axis Bank and HDFC Bank, three of the heavyweights on the Nifty Bank index have seen a slight recovery. But moving on, Gurmeet Chadda, Managing Partner and CIO of Complete Circle, joins us now to decode the market sell-off. Thank you so much, Gurmeet, for joining us. What are you making of the market at the current levels? We knew valuations were stressed, but did you anticipate such a sharp fall?
Good morning, Vivek. I think the last leg has taken most market participants by a bit of a surprise, especially the price action you see now in IT stocks. There's no inherent sometimes reason for it, but it's largely, as you rightly mentioned, is the FPI supply. But 2-3 things, you look, because we've seen one big correction after a very long time. And another thing, Vivek, it's been a bit of a grinding one. It's not that the market has seen those circuits like in COVID and or Russia-Ukraine thing when it just went down 15% in a month. I think this one has been a little grinding one, and the last leg of it is always more painful. So a lot of the stocks are now nearing actually COVID valuation levels. Right, some of the if you look, there's some stability in some parts of the market. For example, if you see banks, I think you'll broadly see now at 48,000-49,000 Bank Nifty. There is valuation comfort. I have not seen Bank Nifty at 12.5 PE and private Bank Nifty at 18% ROE with 2 price to book. At least I think last time I saw that was probably 2008. So I think the valuations are very sweet in financials. Similarly, I think IT also, large cap stocks have taken some bit of a knock. Today also it's down. I think next few quarters there will be a decent earning momentum, also helped by currency. The spend on AI seems to be a more structural thing. And I think even the discretionary spends in US seems to be on track and the fear is not as much. So I think the only thing we are tracking now is to see if the 10-year bond yields can fall below 420 also. It's come up from 470 to 420, 430 in US. If it can come to around 4 or below, I think that could probably mean the pressure on FI selling can reduce. Also, I think the China flows should see some moderation over the coming weeks. So I'm pretty constructive, if I may say that, at these valuations.
Gurmeet, we know FIs are selling, DIIs are buying, but there are many other different forms of domestic money which doesn't get captured in the DII component that we track on a daily basis. So in terms from the domestic complex, all the money that's coming into the markets, where are we seeing selling from? Is it the family of, what pockets have retail investors stopped infusing more money? Are they pulling money out of the mid and small caps? Because many of their portfolios would have seen a sharp correction.
Well, absolutely. I think the MTF book has come down. I think that's come down to almost 15,000 crores, which is the margin trading facility offered by, if you see at an NSE level, I think it's down about 17,000 crores. So a lot of the tax harvesting is also happening, Kripa, because, this is March time. So a lot of big family offices and treasuries would probably sell some stocks, especially where there are short-term losses, and carry them in their books for previous gains or gains which may accrue in future. And the shift has been more in terms of selling more small cap names and buying little more larger names. And that is why you see there's a bit more pain beyond the top 100 stocks, if I were to say that. And also some retail panic. A lot of do-it-yourself investors have done that. But I was speaking to a lot of industry seniors. There's not much change in the SIP book, which I think is a bit of a breather. And there's not much redemption pressure in a lot of funds. So I think that thing has not happened. But yes, at a retail level, at an MTF level, and some tax harvesting happening at a family office and large treasuries level.
And you also said many of the stocks are now back to the COVID valuation levels. Do you want to name these stocks?
Yeah, so if you see from a valuation, I mean, you, for example, let's say Polycap, for example, is now 40 times. After so I'm not saying 40 times is cheap. Banks, as I said, the entire bank Nifty is actually 12.5 P. And you see the private bank Nifty I've never seen them at 2 book value. At least last 10, 15 years I can recollect. So a lot of private banks, some of the NBFCs now obviously have recovered, but they were trading at a much lower levels there. I think a lot of large cap IT now is coming back to probably 18, 20 times earnings, which is even Nifty at a trailing P. I've seen less than 20 after a very long time, right? And a forward basis almost 80 cents. I think the valuations are rich. It's just that you probably need to grind this out for a little bit. But I think the risk reward is pretty favorable. It's now getting favorable in a lot of pockets. Bank, IT, pharma, and consumer, I think, would probably lead the recovery as and when it happens.
Gurmeet, you mentioned two things, that actually have supported the market. The first one you said was the continuation of the SIP book. You've said that not too many changes there. But in case markets continue to fall, a lot of mutual fund portfolios, their returns will turn negative. So do you worry that, that will be the next pocket which will stop seeing inflows? And secondly, are there further worries of margin calls getting triggered on the back of the fact that you're seeing significant selling pressure across a lot of stocks, especially these F&O names have seen 20-25% correction?
Not as much, Vivek. I think the MTF book has reduced, probably will further moderate a little bit, and probably could have moderated today looking at some of the price actions in pockets. I think my worry is the lock-in period getting over in a lot of the IPOs which came in 6 months. And I think that is where the big supply will come. I think the number could anywhere be 20 to 25 billion dollars over the next couple of months. So I think there's a bit of a supply overhang which may come in a lot of pockets. Some of the new age names, because there was a flurry of IPOs in the markets were peaking starting from July to September. So I think the worry is there. I think SIP book can moderate a few 100 crores here and there. That really doesn't move the needle. See, it's a gross number, Vivek. So 26,000 crores you see is a gross. The net figure is 13,000 crores only. So 500 crore, few hundred crores here and there would not make any difference. And I have not seen any SIP stoppage. We have a retail arm also where we do distribution. I have not seen that much as far as till now at least.
Thank you, Gurmeet, for joining in. And the point about lock-in for many of the new IPOs coming to an end today, it's Premier Energies where the shareholder lock-in ends and about 23% of the equity or 10.6 crore shares are eligible to trade today. And this has been one of the best performing stocks. Even after the sharp correction from the top, the stock is at 880, issue price was 450. Premier Energies is the one that we're talking. Stock is down nearly 5%. Lock-in has ended today. A small programming note for all our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, shaping the future. Nominations are now open. Scan the QR code now. Submit your entry for the SME Champion Awards Season 2.
Welcome back to Trading Hour. Well, moving on, let's bring you an exclusive conversation from the pharma space on the sidelines of BioAsia 2025 Summit. Our colleague Winnie caught up with GV Prasad, co-chairman and MD Dr. Reddy. She began by asking about the growth drivers post-Revlimid, which has contributed significantly to the company's business over the last few years.
Core business still has growth, and we will continue to drive the growth. We are allocating more of our capital to branded markets, which are more sustainable than the pure generics market. We are also investing in consumer health. We acquired the nicotine replacement therapies from Haleon. And we are also investing in licensing innovative products from various companies around the world. So the core business will keep growing with some pressures in the regulated markets because there is pricing pressure there. Then in the branded markets, we continue to put our capital there. And then, of course, the consumer health and innovation, as I spoke.
So that's all you've spoken about, everything that you're planning to do. You know, Revlimid has given us cash flows also. Your balance sheet has become good. So where do you plan to invest that? Is there anything more that you're looking at?
We are looking for deals all the time, but preferentially we are investing our capital in businesses which are sustainable. So naturally it's the branded generics market, India, it's emerging markets, It's also branded franchises in Europe and US.
So that's also what we could watch out for coming in. So, you know what, some important updates had come in. Now, MNCs want to move out of certain places. China plus one surely is something that everyone's spoken about. But even from the geopolitical point of view, from Russia, they want to move out. Do you think that, you know, the opportunity that this gives you for the emerging market front, how are you viewing that and how do you see this growth?
Russia is an important market for us. We've been there through many changes in those markets, right from USSR onwards. We are committed to the patients in Russia, and we continue that commitment. We look at opportunities. If there are anything available, it certainly is welcome for us. But we are not getting out of Russia. Russia is a core market for us.
And M&A-wise, you know, what is the strategy there? Any distressed asset that one could be looking at? Because what I hear from some players is that, you know, there is not much there as an M&A activity right now that's happening because there's not much in terms of distressed assets. Anything across the globe?
I think there are restrictions in Russia about taking money out, things like that. So there's not a lot of activity in M&A happening right now.
And across the globe, any opportunities that you would be looking at?
We are open. Like I said, we are always looking for acquisitions which build on our capabilities, our incumbent position. So if there's anything, we will look at it.
India-specific therapies, what are you all focusing on in the next 3 years?
So oncology is a big area for us. We continue to invest in it. We continue to develop generic oncology products, small molecules. We develop biologicals, which is MABs. And we are also investing in innovation in oncology. We're also licensing in a lot of innovative oncology products from global innovators.
Okay. And, you know, with all of this coming in, how do we anticipate the margins moving for the company, right? At one point of time, and I think Q1 FY24 somewhere, you did have 30%, a few quarters at that. 27.5% right now. What are we envisaging with the new asset?
So margins go up and down depending on the product launches, especially in large markets like the US. So right now we have a very good product, the margins are great. But over time, margins will settle down. And I think the margins will be higher in the branded businesses, lower in the commodity generics businesses. APIs, it again depends on the year of...
Where would it settle at?
I don't want to give guidance.
Okay, no worries. Yeah. And Trump and tariffs, because everyone only wants to know about that. You know, do you think that's a bit of a concern coming in? How much of a possibility for companies actually to move manufacturing there? People are like, this is just something that so companies could shift there.
We are still awaiting clarity on this. Right now, we don't know what the tariff will be and what products the tariffs will be imposed on. But if tariffs are still imposed, it's not easy to move production out in scale, especially for the US where the volumes tend to be very high. So the pricing is already not very high in the US. So if you add a little bit of duty tariff on top of that, it should be possible to absorb it. Its only thing is it will increase the cost for the US consumer.
Consumer itself. But it's not a, do you think that would be a possibility or a challenge for our companies to move there, or it's not a sort of a challenge?
I am not really sure whether the economics of manufacturing low-value products in the US will add up.
Okay.
Yeah. So in that sense, I think there may be tariffs, but you know we'll have to watch.
And is India overall ready to get the capacity? Maybe we are talking about the growth or the strategy. Are we prepared for it?
Which growth are we talking about?
To get in the business, maybe on the China plus one, the Russia strategy.
The big growth will be in some segments of the business, not every part of the business. I think emerging markets will still continue their growth journey. India will continue their growth journey around double digit, around 10%. The regulated markets will depend on their product launches and what kind of products we launch.
And you have the capacity to match up the demand. That is, you are getting the demand you're getting.
Yeah, capacity is not a problem.
Not a problem.
It's not a constraint for us.
We will slip into a break on that note. On the other side, market technicals with Sachidanand Utekar. Welcome back. It's a red Friday on Dalal Street right now. There is no respite. The Nifty is still down 300 points. Sachidanand Utekar from Trade Bulls is now with us for a quick technical check on the market. Sachidanand, have we broken key resistance level? Is the market headed lower? What is the Nifty call now? And on the Nifty Bank, things seem to be recovering. It's managed to pare its losses.
Good afternoon, Rima. Clearly, I think the trend has been on the bearish side, and this is the 13th consecutive session wherein the Nifty is trending below its 5-day exponential moving average support. So I think the overall setup is indicating that there could be further weakness, but if you look at the data in detail, we don't see the Nifty, falling below that 22,000 mark. At least for the day, there could be some slippages towards 22,150, but I think that will be an ideal zone wherein some long positions can be considered. If you look at the last 13 days data on the intraday scale, the Nifty has already entered a kind of a oversold territory. The RSI has started, stabilizing, and that's why we believe that the reward to risk on the short side from here on may not be healthy. So I think it's a good time wherein the Nifty can be accumulated on the way on near to that 22,150 kind of a mark. One can keep a stop loss at 22,040 on a closing basis, and probably we may see again a recovery towards 22,350, 400 in a day or so. The 5-day exponential moving average is placed at around 22,500, so that becomes a resistance for the next week. But looking at the trade setup, it looks like the Nifty is in the final decline, and probably we may see a bottom somewhere close to around 22,150, and we may see a recovery towards 22,400 in the coming week.
Understood that, Sachidanand. So you have a slightly positive view. You feel that markets are oversold. Also, when you're talking about the Bank Nifty, do you have a specific trade over there? Where are the support and resistance levels? And Nifty, in case it breaches below the support that you mentioned, around the 22,000 mark, from there, what is the further downside in case it does break?
Good afternoon, Vivek. Clearly, I think the way data is placed, 22,000 looks like a good dependable support. So we are not expecting any immediate movement below the same. But on the higher side, we need a decisive closing about that 22,500 mark, at least in the coming week. When we look at Nifty Bank, a very similar kind of a setup, 48,000 looks like a very strong support base. Even if you look at today's recovery, there was a gap area which was around 48,300. That particular gap area has been filled, and the Nifty Bank has been displaying, good resilience. Even here, the hurdle is evident at 49,000. The moment we surpass that level, we may see the Bank Nifty, trending towards 49,700. So there is relative outperformance when it comes to Nifty Bank, especially if you look at counters like HDFC Bank, ICICI Bank. Even Axis Bank has started contributing on the higher side. So Nifty Bank is relatively better. The pressure is from Nifty IT, and if you look at Nifty IT itself, the level at around 37,280, this is where its 20-week exponential moving average support is placed. And even here, there has been a vertical drop, and the RSI has slipped into the oversold territory. So probably we may see a good stability coming from the Nifty IT, which may help Nifty stabilize near this support of 22,150. And because of the strength that we have seen in Nifty Bank, we may see a good recovery in the coming days towards 22,400.
Thank you so much, Sachidanand. A lot more optimistic compared to what the screen is indicating. But even as we speak, HDFC Bank is now at the day's highest point, up over 1%, taking the Bank Nifty or leading the recovery as far as the Bank Nifty is concerned. Let's now take a short break. Up next, we'll discuss market fundamentals with George. Welcome back to Trading Hour. Well, two stocks that have seen significant selling pressure, especially in the last month, and today you've seen accelerated selling pressure, are two exchange stocks. First, have a look at BSE, the Bombay Stock Exchange. That particular stock is now trending near the day's lowest point. And the other stock, especially that has seen selling pressure intensify in the last half hour or so, is MCX, the multi-commodity exchange as well. So both of these stocks today amongst the top laggards. But as promised, George Thomas, fund manager at Quantum AMC, joins us now to discuss market fundamentals and its stock sectoral picks. Thank you so much, George, for joining us. First up, if we could have your views on the markets at current levels, are valuations now a lot more palatable than they were maybe at the start of 2025?
Yeah, thanks, Vivek, for having me on the show. See, a few months back, we had turned cautious on the markets, primarily because the valuations were not favorable, and even the earnings print had shown some bit of muteness. But as we stand today, with the correction that has happened in the past few days, so at least from a large cap perspective, if we look at it, the upside has turned favorables in many names. And even if we look at our portfolio upside, which has given us a fair sense of where the markets could head in the next 2 years, it is more closer to the longer term averages. So we have been buyers in this market, and our sense is, at least in the large cap universe, we have reached a level where investors can think of increasing their allocation. So for the last few days, we have been adding a bit of weight in few of our existing names and a new name, primarily from insurance, large cap IT, and a gas trading company. But if you look at the small and mid cap segment, they're considering the recent rally. So our sense is there is some more froth left in that space, and it remains to be seen on how things pan out there, primarily because almost 50% of the new folios has come up in that small and mid cap space. And even if we look at 1 year forward valuation or trailing valuation, that segment continues to be slightly on an elevated level.
You said insurance, large cap IT, and a gas trading company.
Correct. That's
correct. Is that where you've added in the last recent past?
Correct.
Okay. There was this greed and fear note where Chris Wood has said that for confidence to return in the market, perhaps the valuations of mid and small caps need to converge with large caps. And when that happens, maybe money will start flowing back into the Indian equity markets. Would you concur? And if that has to happen, if mid and small cap valuations need to come down to large cap, align with large cap valuations, how much more of a derating or correction do they need to undergo?
See, I was just checking at the historic chart, and we have a chart where we follow the mid cap PE versus the large cap PE on a 1 year forward basis. So as of Jan end, so what has typically happened is when there is a fear cycle and when you see long periods of redemption from that small and mid cap space, that chart, the PE of the mid cap index has converged with the large cap index. So for that to happen, if we were to look at the Jan 31st number, so the mid cap PE had to correct by about 25% for that to converge with large cap index, and that has happened in the past redemption cycles. But it remains to be seen how the new investor behaves in this cycle. So like I said, initially, most of the new folios, almost 50% has come up in the last 4 years. And clearly, it looks like the asset allocation of the new investors are skewed towards small and mid cap, which may not be the right thing to do. So it remains to be seen, as volatility kicks in, how that cohort kind of behaves.
Understood that, George. Very important to watch how that particular end of the segment behaves in this particular market fall. George, in the last couple of trading sessions, we've seen a very sharp correction, in a couple of sectors, especially the wire and cable segment. Do you like any of the stocks over there after the 20% correction we've seen across most of those names? Do they look attractive?
See, it shows up a very simple point that when you have abnormal cash flow generation and high ROEs, competition is bound to hit. So none of those wire and cable companies kind of fit into our valuation criteria, and therefore they don't make to our portfolio. But for a new incumbent to make a sizable dent, our sense is it might take a few years. And most likely the market share gain could be from the unorganized and the lower tier tier 2 or a tier 3 player, which are beyond probably the listed universe. But we don't operate in that space primarily because of valuation reasons. So considering a steady state profitability matrices, and when we put the valuation framework, so none of those companies have fit into our criteria.
George, what about banks and NBFCs? You know, there's been significant amount of relief coming in from the RBI in terms of reducing risk-weighted assets over there. Do you like any of the names there? In fact, some of the NBFCs that have sold off significantly. Do you see value there?
See, private sector banks, we have been quite positive, and that remains to be our largest weight. So NBFCs, we have select exposure through a couple of NBFCs. So one is obviously a commercial, one is a commercial vehicle financier who operates in the secondary market, or the second-hand market, and the other is a housing finance company which has a favorable cost of funds. So in that segment, our sense is, unless you have a clear niche, either in terms of underwriting or in terms of cost of funds, you could stand out. But otherwise, we are not biased into some of these housing finance companies or the recent companies which operate in affordable housing finance, where we have seen a fairly high amount of growth in the last few years. So we are watchful in terms of how their underwriting standards kind of work and how their collection mechanisms are in place. So otherwise, we would stick to players which has an edge in at least some of these parameters.
Understood that, George. Thank you so much for joining us and giving us a sense of the markets, even as we try and navigate what is now turning out to be a very steep sell-off. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Play Store or the Google Play Store, or just scan the QR code on your screen.
The mid-cap index is now once again moved to the day's low, 2.7% down on the mid-cap index. But moving on to IT, which is the biggest casualty in today's trading session. Now, at the NASSCOM Leadership Summit, I had a chat with Keshav Murugesh, the Group CEO of WNS. Now, WNS is a global BPM, business process management company. And, the question, the conversation was surrounding how AI impacts the BPM industry. Perhaps, inarguably one of the most impacted sectors would be BPM. So listen in to that conversation.
The disruption of the industry because of AI and generative AI is going to be so exciting that on the one hand, in the short term, it may create an impact on certain kinds of jobs. But in the longer term, it is going to create much more positive excitement because it is going to allow us to go after a much larger TAM, or total addressable market, of areas that customers have never outsourced, have felt that it is core to them, and that is where we will go after. So if you look at the BPM industry today, arguably we are 25 to 30% penetrated, and there's a 70% white space to go after. This technology, this transformation is going to allow us to go after that 70% over the next 1 or 2 decades.
So do you think the Indian BPM industry can grow in double digits from here on?
So if you look at WNS itself, we announced Q3 results recently. We grew 3.2% on a constant currency basis, quarter on quarter. We have guided the market now to probably another, a growth in Q4 as well. And I've, openly said that I think that for next year, getting to high single-digit growth and thereafter to double-digit growth and beyond is very much par for the course for our company.
So today your revenues are about $1.2, $1.3 billion when we look at WNS Limited. Is it possible to say what percentage of it has been positively impacted because of, say, generative AI, the fact that you can now increase your productivity, bring down the costs, enhance the customer experience? Is it possible to put a number to that?
Absolutely, Rima. So if you look at, WNS itself, Over the past few quarters, we've been talking a lot about POCs and getting customers comfortable with this technology. Look, AI is not new. It's been around since the 1950s. But the use of AI and neural network around generative AI models are very exciting and new because it allows us to access the large language models and information that, humans cannot process, very quickly, but these machines can. So from our point of view, the fact that, we are able to actually now convert some of those POCs that we were talking about to actual 33, real, AI or generative AI cases, of which 13 are already implemented with clients and 20 are on the verge of being implemented, showcases that clients now are very comfortable, implementing these models, which means a lot of the noise around, the biases and things like that are reducing. And at this point in time, for this year, approximately 5% of our revenue will be actually created by generative AI models.
Do you think the rise of GCCs is a threat to a company like WNS?
Not at all. I think you and I discussed this once before as well. But I think the very fact that, there is so much of interest in GCCs, first and foremost, again, reinforces and underlines the India model. The fact that, people, CEOs across the world are so comfortable.
But are they taking away work from you, which would have erstwhile come to you?
No. So I'll explain that. So first thing is, it is now resulting in expansion of market share, right? So I think, while GCCs have grown rapidly, the reality is, in terms of the overall outsourced work, it is still a very small percentage. And most companies follow a strategy of now having their own little captive, like a GCC, as well as third-party work, to people like us. And I think with generative AI, like I said, what's going to happen is our ability to go after that 70% TAM, or that addressable market, is now increasing dramatically. So it's wonderful for, the GCCs to now look at certain kinds of work to be done in-house by themselves and have the rest and innovation and IP-driven kind of changes to be driven by companies like WNS.
And just in the near term, say 1 to 2 years, what are the new white spaces that you can address to increase your TAM?
But for the long term, we actually think there is huge potential for us to grow across all our core businesses and particularly make certain bets in healthcare and all digitally oriented, verticals. So if you look at it, insurance is a very important business for us. We will expand it dramatically. Travel is very important for us and has scope to be transformed through generative AI. We're investing in that. But healthcare is the third area that we will invest in significantly.
Interesting conversation there. We'll get into a break. On the other side, we'll continue to put the spotlight on the market. The mid-cap index is down 1,400 points. Stay with us.
Welcome back to Trading Hour. Well, we are seeing the sell-off intensify. The small cap index down almost 3%, the mid cap index too down almost 2.9%. But a very interesting and an important development that will happen in the second half of the trading session, especially a few stocks will be impacted in the last hour of the trading session. Remember, the MSCI changes or the MSCI rejig will happen in today's trading session, and it's actually a net inflow event as far as Indian equities are concerned. IIFL Capital, the alternative desk, estimates that India could see inflows of close to $1.4 billion in today's trading session. So it will also be important to see what will be the FI figure and when it comes out onto the exchanges later on today. But which are the stocks that will be impacted? The inclusion in the MSCI Global Standard Index is actually Hyundai India. That stock will see buying some buy flows. On the other hand, Adani Green Energy is the stock that will be exiting the MSCI Global Standard Index. Another stock that will remain in focus is actually IndusInd Bank. Remember, on the back of increased FPI headroom in that particular name, it will see its weight increase in the MSCI Global Standard Index, and that stock will see inflows of over $250 million. So overall, $1.4 billion of inflows. Can we see a positive buy figure when it comes later on today evening? That's the important question, Reema.
Indeed, but I think the markets will anyway look through that and discount this one-time passive income which is coming on account of rebalancing. We leave the markets with the Nifty below the 22,250, 300 points gone. Mid-cap index is down 1,400 points. The advanced decline ratio now stands at one stock advancing for 11 in the red. Don't go anywhere. On the other side of the short break will be the team of Halftime Report.